And they're right, like it is super volatile. But when you actually look at the volatility of Bitcoin compared to stocks like Nvidia or Tesla, since July 2022, it's been pretty much the same volatility for Bitcoin as it has been for Tesla and Nvidia. We have a $30 million allocation to Bitcoin, but we manage $60 billion. Bitcoin is now out there past the point of no return. No one can stop it anymore. It's this living thing that's out there being supported by miners and nodes all over the world and has a following and hundreds of millions of people using it, that it's so decentralized and such a powerful computer network that it just can't be stopped. It can build a great society. I mean, if you look at the hard money standards from the past or the sound money standards from the past, they built beautiful buildings, they prioritized family and the family unit, thinking for the long term and really providing something for generations to come rather than this fast-paced, consume now, just thinking about yourself lifestyle. The hardest money, as long as it can actually be used as money, always wins out over time.
For the people that don't know you, give us some overview of who you are and why you're excited about Bitcoin.
Yeah, so my name is Jonas. I am from Germany originally, but I've been living in Australia for 6 years now. And in Australia, I work at a company called AMP, which is one of the largest superannuation funds, is what it's called. It's basically kind of like a retirement or pension fund in other countries. So we invest the retirement money for Australians. So in Australia, you're basically, by law, you're required to invest around 12% of your salary into this retirement fund. And we manage around 60 billion of that. And last year became the first superannuation fund in Australia to invest into Bitcoin. Why I'm excited about Bitcoin, I mean, it's like every Bitcoiner, I guess. Like I truly believe that if we fix the money, we can fix the world. But even more than that, I think, you know, having a money that you can save in, having something that no one can devalue, where you can store your expended time and energy in a way where you know that you're providing for your future self and for future generations in a way that no one can mess with, is something that solves so many problems in the world.
Interesting. I love that. Yeah, it's one interesting question that I usually like to ask here is like, what do you think is the favorite thing that Bitcoin solves outside of money in the world?
Ooh, that's a good one. I actually think, and I mean, a lot of Bitcoiners have talked about this, and Seyr talked about this in the Bitcoin Standard as well, but I think Bitcoin and sound money in general, it doesn't necessarily have to be Bitcoin, but because Bitcoin is the soundest money, it has the highest likelihood of doing this. I think over time, as we move to potentially a Bitcoin standard, I mean, we don't know that this will happen for sure, but if that happens, I think you'll see on a societal level a shift in mentality and how people approach life. We often call it a low time preference, but I think with the low time preference comes so many really beautiful things that can build a great society. I mean, if you look at the hard money standards from the past or the sound money standards from the past, they built beautiful buildings, beautiful architecture. They really put time into perfecting their craft. They prioritized family and the family unit, thinking for the long term and really providing something for generations to come rather than this fast-paced, consume now, just thinking about yourself lifestyle. So I think on a societal level, it has the potential to change how we approach the world and maybe live more in harmony with each other and in a way where we really care about humanity more again.
It puts a price tag on war. It puts a price tag. I always like to say it will not make war impossible, but it will make it highly unlikely for someone to pursue war, because being in peace and providing for the community is way more profitable. Yeah. And I think that's the biggest difference, because people are like screaming, oh, like Bitcoin doesn't fix everything, and like how can it make war unaffordable? You're right, it's not 100%. Like it's not like we have Bitcoin and there's no war and everyone loves each other. No, like we're still human beings. We still have problems with each other, but it makes working together more profitable than working against each other. And I think that's a huge step for humanity.
Exactly. And not being able to just endlessly fund wars because you can just print money and reallocate existing purchasing power to yourself, in this case, the military or the government, by printing money. That limits your ability to do it, because once you run out of money, out of Bitcoin in this case, how do you keep the war going? You either win the war, or you come to a peace deal, or you have to get more taxes from your people, which they're not going to like. So yeah, you have to think twice before you go to war. And that's how it used to be on the gold standard as well.
How high is your conviction level on us coming to a Bitcoin standard, and why not 100%?
I wouldn't say 100% because nothing's guaranteed. You know, I mean, something crazy could happen in the next 10, 20 years that, I don't know, makes humanity, or maybe even kills off all of humans or something like that. You know, like, you can't say anything with 100% certainty, I think. But my conviction is pretty high, because I think, in my opinion, we've reached a point where Bitcoin is now out there past the point of no return. No one can stop it anymore. It's this living thing that's out there being supported by miners and nodes all over the world, and has a following and hundreds of millions of people using it, that it's so decentralized and such a powerful computer network that it just can't be stopped. So if you have something out there that can't be stopped, and you also know the history of money, where the hardest money, as long as it can actually be used as money, always wins out over time, then we just need enough time, and then Bitcoin will succeed. The question is, how long will that take? I actually think it'll probably take a lot longer than a lot of Bitcoiners expect or hope for, because there's a lot of incentives for central banks and governments to keep the fiat system alive for as long as possible. And I think by adopting Bitcoin, at least partially, in a way that maybe the US government is doing now, they might be able to keep it alive for longer than they otherwise would. So the fiat system isn't just gonna, roll on its back and give up. It's gonna fight to stay alive for as long as possible, and that might take a long time.
I totally get what you're saying. I just don't like that argument, but I actually agree with that argument.
No, we do that.
It's just like, I think fiat is has such a big networking effect. It is such a huge system that it will take some time for it to really get out of it, and will probably take to fully disintegrate fiat. I think I will die before I see that. And I'm pretty young. I'm 26. So I think I will not live so old that I mean, maybe medicine really develops fast with AI in the next 50 years. So not a rabbit hole. But if I have like a life expectancy of like 80 or something like that, I don't think I will see a full Bitcoin standard without any government tokens, which fiat basically is a government token. Yeah. And all those comparisons, like, think about the horses, and we still have horses running around in Vienna as a, how should I say it, as a vehicle to come from A to B. Now, if you are on a horse, it's not really the point of you getting from A to B. It's more the journey, and you are on a horse because of, not because it's the most efficient way to move around. But this was at one point the most efficient way to move around, and the car came, and within like 10, 20 years, where we went from like 10% adoption to like 80, 90% adoption, this went really quickly. But those last 10%, they're really hard, especially like with horses, it's easier, but with money and with fiat system, which is globally, it will take some time. It's not right around the corner.
And there's a certain amount of power that comes with the existing monetary system as well. Whereas with a technology or a way of getting from A to B, like horses, horses didn't have a lot of power to try to get, keep cars off the roads. But there's a lot of power that comes with money and having control over the money printer. And that power can be used in a lot of different ways. I think that's another aspect that might slow this down.
I guess, yeah, like the central bankers have a lot more power than horse sellers in like 1907 or something like that. A weird comparison, but I think people get what we're trying to say. It's really interesting, retirement fund. We had I think, oh shit, I forgot his name. I'm so sorry. We had from the UK the guy on that did the same thing in the UK from the retirement fund, which is really interesting because when you think about retirement systems, you really would love to have Bitcoin in there. And we made some comparisons and some calculations with people on this podcast already, where like, if you just have 1% of Bitcoin in your portfolio, the loss, even if Bitcoin goes to zero, is not that significant. And if this 1% performs as it usually does, this really boosts up your overall performance of the portfolio. So it's like an asymmetric bet that you can place in your portfolio, and it's really unique. How do you approach the kind of orange pilling for such a huge thing of like, what's kind of your line of argument for that? Because I think there's like a really interesting diversification argument in there. Like, it's hard to argue against 1% Bitcoin allocation at that point.
Yeah, no, you're absolutely right. And the whole journey of trying to get people on board with this at like the whole fund level, because there's our investment team, which I'm a part of, but then there's so many other stakeholders. You've got leadership team, executives, you have a trustee, a board of directors. You know, you have to get everybody at least somewhat on board with this. And there is the portfolio diversification benefit. So Bitcoin is also really uncorrelated to the assets that you typically find in an investment portfolio over the long run. BlackRock actually put out a really good paper last year called Bitcoin, a unique diversifier, where they show exactly this. I actually use that argument a lot as well, because the good thing is, if you have an asset that's so uncorrelated, first of all, uncorrelation is so hard to come by these days because a lot of the traditional financial assets are quite correlated, especially during crisis scenarios. But if you have an uncorrelated asset that then is also the best performing asset, what was it, like 10 out of the last 14 years, and it has a lot of volatility, then that means that the volatility is to the upside. So it has a positive expected return. But because it's so uncorrelated, when you then mix it in with a lot of other assets in the portfolio that don't move with Bitcoin, the volatility basically gets completely diversified away. And all that you're left with is the excess return, at least when you run this in a backtest. So if Bitcoin keeps being uncorrelated, which I think you could expect because it has completely distinct risk and return drivers, and if it keeps performing, which I think you can also expect because we're still quite early in the adoption trajectory of Bitcoin, then I think you can make a reasonable assumption that it will continue to provide this benefit. So yeah, once you understand that, it's hard to argue against. And the main argument that I often hear from people in the investment space is that it's so volatile and that comes with a lot of risk. And they're right, like it is super volatile. But when you actually look at the volatility of Bitcoin compared to stocks like Nvidia or Tesla, since July 2022, it's been pretty much the same volatility for Bitcoin as it has been for Tesla and Nvidia. But the reason why that's interesting, that comparison, is that Nvidia makes up, and Tesla as well, make up a large chunk of the MSCI world. I think Nvidia is like 4% of the MSCI world. So if you put a lot of money in the MSCI world, which no one would call risky, you're actually getting a lot of exposure to Nvidia in that investment, which is just as volatile as Bitcoin. You know what I mean? So no one's criticizing investing in the MSCI world because of Nvidia's volatility. So why are they criticizing a small allocation to Bitcoin for its volatility? It's almost doesn't make sense.
It's also I'm always fascinated with finance guys that look at volatility as it would be the worst thing in all of finance. Like if you have volatility, it's bad. And I just 1 week ago, or like a few days ago, actually, I recorded with Chris Cooper from Fidelity. I think he's the vice president of Fidelity Digital Asset Research or something like that. Yeah. Their titles get pretty crazy. And he talked about that there is bad and good volatility. The same way that there's bad and good cholesterol in your body, there's volatility that is bad, that is downwards and that is risky, but there's good volatility that is mostly skewed to the upside. And if you look at Bitcoin, I think that's the kind of volatility you might actually like in a portfolio because you can play a lot around with it. And again, if it's like 1%, you can lose 100% of this 1%, but you can gain 1,000% in this 1%. Yeah. So it's like this asymmetric bet of volatility that is actually very good for you. Yeah. And then you have the historic of Bitcoin. Then you have already players in like Fidelity, BlackRock, Michael Saylor with like strategy. Like those are not like, that's not startup level. They're just playing around with some coins. That's like serious capital, serious. Like, I don't know. I don't even want to know how many people BlackRock employed the last 5 years just to research Bitcoin and how to play that best. Like, I don't know, hundreds, maybe even thousands. I don't know. This is serious stuff. So now to come out and say like, oh, like it's volatile, I don't know how, and it's almost a lazy argument at this point.
Yeah, I agree with that. And I think it comes back to the typical arguments that you often hear, because volatility is one of the typical ones you hear. Then I still hear people say, oh, but isn't it money used by criminals? Or Bitcoin doesn't have any intrinsic value. Or one thing that you often hear in the finance space is, how do I value this thing? It doesn't have any cash flows. And all of those criticisms, like I completely understand where they're coming from. It took me so long to understand Bitcoin, way longer than in hindsight I wish it did. And I had all of those questions myself, but the only way to overcome that is to actually approach it with an open mind and to try to educate yourself and to put in the proof of work in this case and actually study this thing. Because there's so many articles out there that refute all of these criticisms. And when you really think them through, they disappear. And that's actually one thing that I did within AMP whenever we did educational sessions was I made sure to address all of the typical criticisms that you hear, because it takes the fear away from people. Once they actually hear a good argument against that, they're like, oh, actually, I thought this was maybe a downside or a negative about Bitcoin. But now that, in this case, Jonas has brought a pretty good argument against that, I actually don't have that fear anymore. Now let's look at the positives of Bitcoin. And I think it's totally possible. But the thing is, you also you have to be humble when you do all those things. Just like I just said, I had all of those fears myself. So I understand where people are coming from. So you have to meet them in like an understanding way, because everybody is at a different point along the Bitcoin journey. And most people are still at the start line, basically. But you can refute all of those arguments easily.
You are one of those guys that are in a company where there's not only Bitcoiners. So you're probably like one of the very few, I would guess. And I think most of my audience, probably, that's an interesting question that I could because I ask every day one poll to understand the audience better. I think most of my audience is probably working in a job where they are their fiat guy, their Bitcoin guy, or one of the very few Bitcoin guys, depending on how long they're in Bitcoin, depending how much the orange build already. And it sometimes can be hard because you get shit either way. Like you're the Bitcoin rich guy, or like you're the loser that invested in Bitcoin just because it just crashed like 20% or something like that. How was your experience being the Bitcoin guy in a company, and how also did you approach getting other people into Bitcoin, but not wasting all your time and energy on people that don't even want to discover it?
Yeah, that's a very good question. I think from my experience, there was almost two different lives as a Bitcoiner within my firm. One life was pre-ETF launch, and the other one was post-ETF launch. Because I work for an institutional investment firm, essentially. Pre-ETF launch, there were a few other guys who were into crypto or blockchain and a little bit into Bitcoin, and I could talk to them about it. And there were actually a few graduates who just graduated from university who were doing like grad programs with us, and they were really open to a lot of the stuff that I was teaching them about Bitcoin, and were also really receptive to me explaining why Bitcoin, not crypto. But then the older professionals within the firm, there were a lot of skeptics, like even economists, Keynesian economists within the firm that are responsible for economic forecasts and stuff like that. Whenever Bitcoin was just brought up, it was basically almost shut down straight away. But then once the ETF launched, in the whole investment team, there was almost like more openness to this thing. And we started really discussing it more seriously. And the good thing also is that the head of portfolio management, who's basically my boss, he's pretty big into Bitcoin as well. So we had someone at a pretty high level who was very convicted of Bitcoin. He was a gold bug before discovering Bitcoin. So he knew all of the underlying fundamentals even before seeing Bitcoin. And then we started having internal dialogues around this. And one thing that I noticed, because we invested into Bitcoin in May last year at a price of like the mid 60,000, so pretty good entry price looking back now. But even after we made that investment, it was a really small investment. But even after we did that, there was still a lot of people who were super skeptical about it or just had a lot of questions. So what I then actually did is I went to the CIO, the chief investment officer, and said to her name's Anna. I was like, hey, Anna, look, I think what we just did is a massive step. Like, we just became the first superannuation fund in Australia to invest into Bitcoin. That's massive. Like, there's a handful of retirement and pension funds all over the world that have done this, which means we're now a leader in the space. But if we want to continue to be a leader in the space, I think the biggest hurdle for us is that there's still a lot of people who are skeptical and a lot of people who don't really understand this investment. And I think the main hurdle that I see to us overcoming that is lack of education, lack of open dialogue. So I actually suggested to her to run an educational session, like a 90-minute session on Bitcoin, where I laid out the history of money, the case for Bitcoin as a store of value, Bitcoin in a portfolio, Bitcoin versus crypto. And really, I took a lot of time to address all of the typical criticisms, even created like an ESG slide, because we have an ESG team as well. And they were really concerned about the environmental impact, the mining, energy use, and all of that stuff. And that was received really, really well. And I think one of the main things that you have to do, just like I said, you have to be very understanding, and you have to know your audience as well. You have to know who you're talking to, and then know maybe what they're skeptical about and how to address it really well. And if you actually create a really good narrative from start to finish around all of that, I actually found that it was really well received, and everybody started being really open about it. So I often find that like Bitcoiners, when they try to orange pill people, they get really defensive quickly when it doesn't work, and they say, "Oh, everybody gets Bitcoin at the price they deserve," or "If you don't get it, I don't have time to explain it to you." But maybe they just haven't found the right way to approach an audience in a way where they receive it very well.
I think those memes have some value, but honestly, maybe they are not as good as they seem on Twitter. Like this, have fun staying poor.
Yeah.
It immediately ends all conversation.
Yeah.
If you say to someone, "Oh, like have fun staying poor," yeah, that's it. You will not orange pill him. Maybe he still gets Bitcoin like a few years when he's open again and he forgot that you called him poor. Also, you get the price that you deserve is very true and is very humbling. Because I also saw Bitcoin at about like 10x lower prices than I originally bought, which is really hard to swallow that pill. But we all have to swallow that the ego death capital, that ego death pill at some point. But I think it's not really helpful if you want to orange pill someone that you really like to orange pill. Like if you don't care if he's orange pill, like then say whatever you want. But if you want to orange pill your company, your family, your friends, your partner, whoever, be open, be mindful, be slow. don't rush into it. How was it actually that you got them? Or was it you that you got them to do the investment in the first place? Like you talked about the after step of making it long-term and sustainable and with the education program. How was it even that they first got into it?
To be honest, the initial allocation actually wasn't as hard to get through as I thought it was. And it wasn't just like the head of portfolio management probably played a bigger role in this than me. And the CIO as well. She's super open to innovation. So the main trigger for it was when the ETFs launched in the US. For us, that was really a sign of, okay, Bitcoin has become institutional grade now. And we already had a lot of people in the investment team who were at least looking into crypto, and then me and the head of portfolio management who were basically Bitcoiners. I think I'm the only true Bitcoin maxi, but that's all right. He's still very convicted. And we then started evaluating how and if we could add Bitcoin. And the good thing for us was it was almost like we had the right team at the right place at the right time, because one thing we also had was what's called a dynamic asset allocation. I'm not going to waste too much time on this, but basically what this is like a basket of trading strategies that we run in some of our superannuation portfolios to generate a little bit of alpha on top of the allocation that the fund already has. But in this basket of trading strategies, we already were trading commodity futures, equity futures, volatility, and a few other things. But we were trading gold futures in there. So for us to then go from trading gold futures to also including Bitcoin futures in there, which is what we used to get the initial allocation, wasn't that big of a step. And the way that we then sold it as a risk responsible way, which it actually really is that we don't have a fixed allocation to Bitcoin, but we have a few different investment models that evaluate how favorable the market currently looks for Bitcoin and can dial our Bitcoin exposure up and down based on those investment models, which also means that when Bitcoin starts looking less bullish, we will be able to de-risk before Bitcoin actually has a big crash. And in the backtest, we're actually able to reduce the drawdowns of that Bitcoin allocation quite a bit compared to just holding Bitcoin only. So selling it as a small allocation that we really risk responsibly manage was basically the way that we managed to get it approved and included in the retirement portfolios.
That's super. What kind of data are you looking at to assess the bullishness or the bearishness of Bitcoin? On-chain data, sentiment data, like investment data, like?
Yeah. I mean, I can't tell you everything, but there's some momentum stuff involved in there. We're looking at sentiment, money supply is a part of it as well. And those are probably the main things. We have started looking at on-chain data a bit as well, but haven't found anything that works as well as the models that we currently have. But I'm looking at that on the side. For sure.
Yeah, I think money supply is a big one. I've talked to many because like it's a popular thing to do in Bitcoin. Try making like there are so many models. Like there's this stock to flow model, which is a very old one at this point. Not as many talking points right now. Then there's a power law model. I literally have my second round with Giovanni from the power law model tomorrow. Nice. Will be fun. Always fun with Giovanni. Then there are just on-chain analysis with like Checkmate. I did it and many others where we went through on-chain data. I went with like correlation to M2. There's really interesting things that you can do. I personally just like buy Bitcoin all the time. So like I'm just at 100% Bitcoin. So I don't personally care about that. But if you care about that, I think you can really make a good case of like, yeah, let's try to time the buys better, and let's try to just time the market a little bit. So never fully go out, never fully go in. If you are like in that era, I think you can get probably like a additional, like, I don't know, 12, 20%, 30% or whatever performance on Bitcoin. I think it's possible. It's just a lot of time, I think, that goes into research. But if you have the man resource, of course, it makes sense.
Yeah, exactly. And I think there's a different case for how you handle a Bitcoin investment in your personal portfolio. And it also, it has to match your conviction as well. The thing is, even if we wanted to do a big Bitcoin long only allocation in our funds, at the moment, we wouldn't even be able to do that because we are so tightly regulated. And we're benchmarked against like a certain benchmark where if we underperform this benchmark too much, which could happen if we have, I don't know, 3% fixed in Bitcoin and then there's a massive drawdown, we could get massive fines for that. We might have to close some of our funds because we're investing people's retirement money. So we're bound in what we can actually do, which I think is fine at the moment because institutional investors have to start slow with all of this as well. Just because there's, a Bitcoin maxi at the firm who makes a compelling case for it doesn't mean that they can go all in straight away. But I think it's important that we got off zero and that we're making this move and that we're now working together with regulators, that we're now leading this industry in Australia when it comes to Bitcoin adoption. And I think as Bitcoin develops further and further, and the price goes up further, more and more institutions and governments adopt it, I think others will look at that and maybe switch from seeing investing it into Bitcoin as the risky thing to not investing in Bitcoin as the risky thing. And I think that's probably the shift that you might see in the next couple of years.
The first time I ever made any money, I got myself from that money a watch. And ever since then, I collect timepieces to remember times where I achieved some milestone. That's why I got the Bitcoin 2025 edition when I went to my first ever American Bitcoin conference. So for me, the Bitcoin watches from Coin Vigilante represents the time that we are living in. For every person that wears a Bitcoin watch, I know they are representing sound money to the outside world. Make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I know how big of a hurdle it can be to have self-custody, but it's so freaking important to make that first step. We have to make sure it's as easy and simple as possible. And that's exactly what BitBox did. BitBox created the simplest and the easiest hardware wallet to use to get into self-custody. So get yourself a BitBox down from the link in the description. And when you use code Robin, you even get a 5% discount. I just remembered the name Sam Roberts. It was from the UK Cartwright. So that was fun discussion also with talking about retirement fund. How do you actually look at and it will be when this podcast comes out, Bitcoin Prague was already, so I'm sorry for people that see it now, but we will soon be, literally this week, be at Bitcoin Prague. And we will talk also about institutional adoption and if it's a good thing. I think there will be really fun conversations around that. How do you look at institutional adoption from BlackRock, and they are coming in from a Bitcoin Maxi standpoint and this original cypherpunk peer-to-peer cash kind of ethos?
Yeah, it's a good question. To be honest, I think my opinion is initially I was very skeptical of all of that. But if Bitcoin really is what we all think it is, then it can't be fully adopted without institutions also adopting it. And that's the thing about Bitcoin. It's money for everyone. It's even money for your enemies. Like everybody has access to it. That's the whole point of Bitcoin. So if institutions understand what Bitcoin is and they get on board, then that's just how it is. And you would expect this to happen at some point, because there's no way to get to full adoption without institutions also adopting it. And they're all finance savvy. They want to make money. If they see this thing and they understand the value behind it and the asymmetric upside that we've already talked about, you would be stupid to assume that they wouldn't get on board with this. So to me, it's almost like this inevitable thing that had to happen eventually. And yes, for the traditional cypherpunks, it might be against the original ethos of Bitcoin, but I think that ethos was maybe never fully realistic in the first place. And, this is something that has to be adopted by everybody, or it doesn't get adopted by everybody, and institutions will be a part of that. That's probably what I think.
I think so too. It's like you would be stupid to assume that we will have Bitcoin adoption and institutions are not part of it and not seeing it.
Yeah.
Like I think it's good that we already have 16 years where we could allocate a lot, and institutions are still, we always talk like institutions are here. Like, I don't know, are institutions really here? Like, yes, there's BlackRock, there's like pension funds here and there, but it's first of all very few players, and those players are here with like 1%, 0.1% of their purchasing power. Of course, there's strategy that is aggressive. There's semi-scientific. There are some outliers. But how many companies in the S&P 500 have Bitcoin? It's like Tesla. That's the only one, I guess. Yeah. Strategy is still not in there. And even Tesla just has, 10,000 Bitcoin? How much is that compared to what they have in fiat? Yeah. We are, I think it's fair to say that we didn't even really start with institutions. It's like just like getting starting.
I agree. And I said this in a presentation that I gave at a Bitcoin conference in Sydney as well. We haven't even dipped a small toe in the water yet. We've dipped like the hair of a small toe in the water. We have a $30 million allocation to Bitcoin, but we manage $60 billion. Like that's, a fraction of a percent that we've invested into Bitcoin. But it's gone really well thus far. Everything in the Bitcoin space has developed more positively since we invested. We have a strategic reserve in the US. The Czech central bank head was talking about it. We have heaps of Bitcoin treasury companies coming up. Regulation has changed all over the world. Like this is just developing more and more positively. But institutions move slow. And especially with retirement money, you have to move slow because you have to move slow and not break things, which is how Bitcoin moves as well, actually. But that's just how it will happen. And the other thing about it being a positive or negative thing, I think if you really believe in Bitcoin and you think that nothing can stop or corrupt Bitcoin, then is there even such a thing as good or bad? Or are things just what they are? We give meaning to things. It's subjective whether we see something as good or bad, but maybe institutional adoption just is.
How do you think Bitcoin will reshape this retire? I mean, I have to ask with retirement funds and with Bitcoin as a topic, so I think we have to talk about retiring on Bitcoin. I personally am just like, I will retire on Bitcoin. I have 100% in Bitcoin. That's my retirement fund. Yes, I also have from the state something. Yeah. Not because I choose to, just because I'm forced to from Austria. I don't know how it's in Australia, but I have to allocate money there. I'm literally forced to do that. But I don't count on that money. If I lose it 100%, I wouldn't be surprised. That's how I look at it. And so I'm positively surprised if I get anything back. But for me, Bitcoin is my retirement. How do you look working at such a fund as a Bitcoin maxi and your personal strategy of like retiring on Bitcoin?
Yeah, so my personal strategy is obviously very different to what we do at the fund. And I have to be a bit careful here because I'm still a representative of AMP in a way. But in Australia, what you can actually do is you can create what's called a self-managed super fund where you can either invest your retirement money with a fund like us and we will manage it for you. Or one other thing, the other extreme is you can say, no, I know what I'm doing. I want to create my own fund and invest it the way that I want to. And that's actually something that I decided to do. So I'm basically managing my own retirement money. But for most people, this isn't something that I would recommend either because you really have to know what you're doing. And there's heaps of costs that come associated with that. Like you have to do your accounting and your P&L and your taxes every year yourself, or you have to hire an accountant, which costs a lot of money. And there's so many loopholes you need to jump through to even set it up. So this is only for someone who really knows what they're doing and thinks that they can make up for the costs associated with that in their returns. But for most people who don't have the time to actually read up on finance and investing and maybe even don't know anything about things like Bitcoin, I think it's actually really good to have these funds set up that will invest the money for you. It's way better than the German system, for example. But yeah, having someone manage your retirement money for you and actually make really good returns. Like we made 17, 18% return last year in some of our funds. That's better than a lot of other retirement schemes all over the world. So I think for the average person, that's probably the way to go, to just put it there and make sure that your risk profile is probably relatively high if you're young, so you compound high returns over a long period of time. But it depends on everybody's personal situation, I would say.
I love the optionality of it, Yeah. I love that as soon as you're forced to, you're also not Because I think if you force people into retirement funds, those retirement funds will not be as good performing as they would be voluntarily. Yeah. Because then all of a sudden they have to compete in the free market. Yeah. 17% is a lot better than the Austrians did. like that's not even close. I don't know the exact numbers, but it was definitely single digit, and I think it was actually middle to low single digit. Wow. I was like, shit, like almost everything did better than this. But I'm happy to trash on the Austrian retirement funds.
Yeah, no, German ones will be bad as well. But as you said, we have a lot of competitors in Australia. Like we're one of the larger superannuation funds, but there's so many other ones that are pretty big as well. And it's not that hard to move your money between them. So if we start massively underperforming, we would expect people to move somewhere else where they're performing better. And this keeps us in check in a way as well. Again, coming back to the free market being such a good thing.
And the flip side of that is also, if you allocate to Bitcoin is doing good, you're outperforming all of the sudden and all your ratios look better. This will bring more capital to also your fund, because it's the free market and it's easier to. I just love free markets, man. If you do well, you should be rewarded, and the capital should flow to you.
Yeah, 100%.
Have you actually already seen other pension funds seeing this strategy? I mean, 30 million of 60 billion, that's what, 0.05%, if I'm correct. Yeah. So it's not like something that everyone might even see from other competitors, but they probably look at their competitors pretty closely, what they are doing also. Have you seen any interest from other pension funds?
Yeah, it's interesting that you ask. I think they are all aware that we did this because it made pretty big news when we announced it. It was covered in like the biggest financial newspaper in Australia. And I think they would have all seen it, because a lot of them, some of our biggest competitors even came out on the same day saying that they're not going anywhere near crypto. That was the first mistake that they made. They mistook crypto for Bitcoin. But I think, again, the reason for that is, in my opinion, that they probably just honestly lack the education and understanding of Bitcoin. And it's, they take their job really serious, and they've been in the industry for sometimes 30, 40 years, and they literally want to get the best results for Australians and for their retirement. And if you then don't have the right understanding of Bitcoin and you still see it as super risky, of course, that's your response. But I would now make the point of saying, okay, you see one of your competitors make an allocation to Bitcoin. Maybe instead of saying, oh, we're not going to go anywhere near this, maybe say, interesting. Why did they make this allocation if they're dealing with retirement money? They should be very careful. Is there something that they know that we maybe don't know? Let's have a look at this and let's allocate some time to this. I think that would be the healthier response. But again, I think it's the same thing that happens in society, where you have some people moving first into Bitcoin, they then see good results, and other people slowly follow over time as they learn more and more about it. But it's a slow process. And people working in the finance industry, they have families, they've got kids, they have a full-time job, they have hobbies on the side. They might not even have time to invest the hundreds of hours that you probably truly need to understand Bitcoin to the point where you have some conviction in it.
Was the launch, I didn't think about that, was the launch for the news and articles that came out overall positive or overall negative? Or like, what did you kind of see as a reaction from, especially, I mean, obviously Bitcoin has loved it, but like from the outside Bitcoin and outside Bitcoin bubble?
Yeah, so there was two types of reactions. One from some of our competitors and the regulators was quite skeptical initially. And on LinkedIn, one of my colleagues made a post about it, and there was such negative comments. Like I couldn't believe how bad they were. Like people were literally calling us completely irresponsible and that we're supporting, I don't know, North Korea and terrorism or something like literally like the craziest stuff, like all of this stuff. And I was just reading the comments and I was like, this is like late 2024, and this is really the reaction you have to this. This is crazy. So there was a lot of that. But then the interesting thing was our call center, after we announced that we invested in Bitcoin, started getting the most calls that they got in like the last 7 years. And so many people were calling, asking which of our portfolios had invested into Bitcoin and how they can move their money into those portfolios. So there was almost like a big disconnect between what a lot of our competitors and the finance professionals thought was appropriate for a retirement portfolio and what the people whose retirements were actually investing really want. And I think that there's a big gap between that. And maybe that's a gap that we need to bridge somehow.
If you do what the average is doing, you will get what the average is doing. If you go a little bit beyond that, you will get more. So that it's, I love that example. And by the way, LinkedIn is peak fiat. I like, yes. don't put more time in that platform than you need to. I really don't like that platform too much. I like almost every other platform more. Maybe TikTok is even worse, but coming back to that, it's like interesting to see that reaction, because I think that's what all the businesses see of like regulators, maybe even like investors, maybe are like scared of like, oh, like what is that new thing? But then at the same time, it's something interesting. It's innovation. And if we learn something from innovation, literally anything, if it is from the printing press, electricity, internet, there's always a very strong group that's called the current state that is very against it, because they don't want to rock up the current state. Because what it means for regulators and for other pension funds, they all of a sudden have to care and actually read into those things. And you know how hard it is to actually step the process up of, let's educate our people, like in the company, about this Bitcoin thing. We have to all of a sudden set educational programs up and make seminars and things like that. It's not easy. And so there's a, like, like what stays, like things want to stay in the same motion as they are. And I can imagine how hard this must be to move in a new direction, and how slow it is, even with like 0.05, like, come on, like if you lose all of it, like it's 0.05%, even that is ridiculous for me. But it's really interesting that you got that positive feedback of people calling like, hey, I want to move money there. How can I do it? And stuff like that. And what was the most in 7 years? That's amazing.
Yeah. No, it was. And to us, that was really rewarding, because after we saw all the negative reactions online, we were a bit like, oh man, like this is really negative. But then we got the positive feedback from all of our members and even people that wanted to join AMP. And then we were like, okay, we made the right decision. I mean, we kind of knew that anyway, but it's reassuring to have that. And like you said, when you think about retirement funds and stuff like that, like we're basically like really, really big ships that carry a lot of weight, but we move super slowly. So when we turn the steering wheel, it takes a long time until we actually change course. Whereas if you're on a small speedboat, you can go back and forth and like do a lot of stuff really quickly, which is what we can do personally. But yeah, we're steering a very slow, big ship. But I guess once you properly turn, you move a lot of weight into that direction as well. So I think that's what you'll see coming up in the next couple of years.
By the way, I love the comparison for Bitcoin and crypto, the same way as the Earth is the planet. So there are a lot of planets out there, but the Earth is very unique, and it's probably the best place right now for us humans to be by a far, far mile. Yeah. And the same way as with like Bitcoin and crypto. Yeah, there's other cryptos out there, and Bitcoin technically is a cryptocurrency, but there's a reason why like 60 or 70% of the market is into Bitcoin, because it's very unique and very different to everything else. And everything else might not even has, like all other altcoins still have to prove, for me at least, their place in the market, if they even deserve anything. I don't know. Maybe there's some use case that I cannot think of that might persuade, and then it's something in the future. But I just don't see it right now. So it's unfortunate that Bitcoin gets gets in the same bucket as, I don't know, the Shiba Inu token or like a meme coin. I don't even know those coins because I don't even research them at that point. But it's very sad to see that, and especially if you go with a pension fund, I guess you have that crypto conversation a lot.
You do. And people often approach me recently after I started doing the educational sessions. I had people in the office come up to me and say, "Hey, I heard you're the crypto guy in our company." And like the first thing I always say is, "No, I'm the Bitcoin guy at our company. And here's why Bitcoin is different to crypto." And like they always get the same answer from me, because it's one thing that I always make sure in like within our company, but even on like a personal level, if I talk to friends or family, to make sure that they walk away from the conversation understanding why Bitcoin is different to crypto and why it's so important to distinguish between the two. Super, super important. Even within us in our firm, like whenever I do that educational session on Bitcoin, like everything that I focus on, the history of money, the store of value case, the portfolio diversifier, all of that only applies to Bitcoin. None of that applies to crypto. And as you said, maybe there is a case for some of those cryptos, but we have to be aware that Bitcoin is like this global monetary alternative, store of value, kind of like digital gold, but way better. All the other cryptos are trying to solve problems that we don't even know whether we need a blockchain to solve those problems, or whether they actually even solve the problems that they say they do. It's like blockchain's not the innovation, Bitcoin is. And understanding that point is so important.
I heard that recently, it was about a year ago on a family gathering from an uncle of mine, like, "Oh, why do you focus so much on Bitcoin? Isn't blockchain the really important thing here?" And I'm like, it's like you, because you don't want to be disrespectful, because he's asking a genuine question, but it just hurts. the Bitcoin maxi heart.
Again, I think for that, I used to approach that very differently. Whenever stuff like that happened, I would be almost a bit toxic and just focus on the negatives of the other cryptos. But that also made people really defensive and made me seem very close-minded. So what I've done now is I've flipped it around. I now focus on the positives of Bitcoin and why it's so unique, and then make a distinction between crypto and Bitcoin. And usually people then understand themselves why crypto is way more risky, way less promising, and maybe way more like really early stage tech investing, whereas Bitcoin's very, very different to that. So again, the toxicity in those situations might not be the best thing to do. Once again, like you can't just go and call people shitcoiners and say, "Oh, like, that's all a scam," because then people shut off. But if you focus on just the positives of Bitcoin and why it's different, people usually get it themselves.
Yeah, that's probably the best advice for orange pilling people. Stay positive and cheerful and ask questions. So you really, and listen nicely what they really want to know, where they are really in their journey. And if they are open to learn, like get them you can go ahead and tell them like what Bitcoin is, if they're really open to it and they're really asking questions, and you can be the educate in that frame. But oftentimes we don't get you educate because people are not open. Yeah. So what I found is when people come with like an opinion to you and say like, "Oh, Bitcoin is bad for the environment," or "Bitcoin will not scale because it only allows 7 transactions per second," people actually have those weird things in there because they picked up one headline. I go ahead and ask questions because I have never met an informed Bitcoin critic that really understood Bitcoin to its full potential. So then you can go ahead and ask questions. Oh, like, why do you think so? Then it's like, oh, like 7 transactions cannot scale. Oh, do you know about the Lightning? How does that work? Oh, okay, it's not good. Like, do you know about the difficulty adjustment? How it is referred when people bring up the environmental FUD and they're like, here it's what it is now. What if the whole world transacts on it? Like it will scale to that amount. No, did you consider the difficulty adjustment on the base layer? And did you consider the Lightning Network? And the thing that I discovered is the more questions you ask, like genuinely ask them, and not like gotcha, but like actually ask them if they understand that and how they consider this, they will find out themselves that they have no clue. And then they might actually ask questions, or they get really defensive if they're assholes.
I love that. No, that's brilliant. And I think psychologically speaking, it's always more powerful if people come to conclusions themselves, even if they're guided there, than if they're told the solution straight away. 100%. That's awesome.
What do you think is kind of the blockers in the way, the challenges in the way to wider institutional adoption? Is it just time and education, or is there things that you are seeing right now that you're like, okay, that's really challenging? That's kind of stopping us from going from 0.05% to 5%. And this is stopping the other pension funds to go to 1% allocation and stuff like that.
I think the biggest thing, apart from lack of education and open dialogue, is regulation. In the US, you're seeing super positive changes in terms of regulation right now. But in Australia, for example, and I'm sure it's similar here in Europe, the regulation is still really uncertain. So I think a lot of companies don't even want to make this move because they don't know what's going to happen on a regulatory front. And even if regulation looks a little bit positive now, what if that changes? And like, as long as there's not certainty there and open dialogue with the regulators, which is something that we're actively trying to foster. But again, this is a slow process. I think that's the biggest hurdle. But then the problem is within the regulators, you also most likely have the problem of lack of education and lack of openness to it. So it's almost like maybe we need to also play an active role in helping educate and talking to regulators about Bitcoin. Also making a clear distinction between Bitcoin and crypto, because once again, regulators, what's their job? Their job is to make sure that companies like us don't do anything stupid with the retirement money. So their job is also to protect people's retirement money, and they take their job very serious. So if they then still put Bitcoin in the same bucket as they put crypto, and they see all these scams and rug pulls and pump and dump schemes in the crypto space, because Bitcoin falls in the same bucket in their heads, they transfer those negative things over to Bitcoin because, it's all in the same bucket. And that maybe they even transfer some of the positives from Bitcoin over to crypto, which also shouldn't be happening. But the really harmful thing is the negative attributes of crypto being transferred over to Bitcoin. So making that distinction could be a big helper there as well. So yeah, regulation is the biggest thing. But I think at the core everywhere, it's just education.
Interesting. I love that. I have said it multiple times, and I get confirmed that by almost all of my guests, is the next 10 years, the most important thing you can do inside of Bitcoin are two things, but the more important thing of those two things, I think, is educating on whatever level you can do that. The second thing that I always bring up is building infrastructure. I think building Lightning solutions, building the layer threes, building exchanges, building whatever you want to build in Bitcoin that we need to get the full adoption is also extremely valuable. Also building like metal plates and hardware wallets and self-custody solutions, services and products, whatever you're doing in Bitcoin is extremely, extremely helpful. But the more important thing, because it's the first thing that is the first thing of the funnel, is like educating, because we are now so small, and getting all the intelligent people into Bitcoin will automatically lead to having amazing companies that build amazing products, that build amazing services, to build amazing ecosystems in Bitcoin. So education is actually the first point of the funnel that gets the amazing people inside, the amazing builders and intelligent people, to actually make the whole ecosystem work really good. So I love that. Thank you for support. Thank you for confirming my bias.
Yeah, no, 100%. And I think I got to the same conclusion as you, which is why I wanted to do these educational sessions. And I've now even done a few to financial advisors, so external to our firm as well, because we work with a lot of financial advisors, and they refer their clients to us when their clients ask, where should I invest my super and stuff like that. And everywhere, like, it's actually really well received. So yeah, I mean, people need to get out there, need to educate, need to find ways of educating different audiences, and then we can lay the foundation to then build on, but the education is the foundation that we need to have.
100% agree. I have one question to ask each and every one of my guests, and the question is, what can we learn from you besides Bitcoin?
Oh, that's a good question. I think one thing that I really realized last year, because my dad unfortunately passed away last year, and I flew back to Germany like 9 days before that happened. And those 9 days were the most important days of my life, and also the days where I was the most present. Like every second counted so much, and we made the most out of every second. And I mean, this is something that people say all the time, but if you have something that you want to do, if you have something you want to say to anybody, whether it's I love you or that you appreciate them or something like that, don't wait. Do it now. Anything that you want to do, and like in the Bitcoin space as well. Why wait for anything? Do it now. If you want to build something, build it now. If you want to quit your job and try to do something in the Bitcoin space, why wait? Do it now.
I love that message. That's why I 1 year ago I made exactly that decision, and I love that I did it. So that I can. Wow, I just leave it like that because I fully heartedly agree with that message. Thank you so much, Jonas. We have an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you a very specific question. If you had the opportunity to be the White House correspondent for the Bitcoin magazine, would you take the job or not?
The White House correspondent for the Bitcoin magazine.
It's not a job offer, just so you know.
That's to be honest, if I really had the offer, I think I probably would, because you'd get to work with so many people at such a high level, and probably also be in control of the narrative in a way that you could probably have a big impact. So yeah, I probably would.
Awesome. I think it's probably not a surprise from whom the question is coming from. The White House correspondent for Bitcoin magazine, from Frank Korver. He was the previous episode. So, yeah, cool. Because he talked about in the previous episode in the podcast how hard that decision was for him to if he takes a job or not, because before he worked in Nigeria and in Africa for for the adoption of payments and stuff like that, and now he's in the White House, so it feels a little bit like off. But he saw that actually in the White House he can make a lot more happening, and this is actually also filtering back to Nigeria and Africa and all those things. But yeah, it was an interesting discussion I had with him, and it was a very fun question to give to the next guest, definitely.
Yeah. So now I get to give you mine for the next guest?
Yes, I usually do it offline, but you can, if you already have it, it would be fun to talk about it now also.
Yeah. So my question for the next guest will be, what are 3 things that you're grateful for?
Love that.
It's an exercise I do with my fiance now. I actually proposed to my girlfriend.
Congrats.
Thank you. It's an exercise we often do before we go to bed, basically thinking about 3 things that we're grateful for on that day, just to end the day on like a positive note, but also to reflect on the day and all the things that actually happen on that day. And I actually find that it just, I don't know, it leaves you going to bed in like a really nice mindset. So yeah, gratitude is something big in my life.
I love that. That's really cool. I think we can make a whole nother podcast not talking about Bitcoin with you, but maybe we'll keep that for the second round on this podcast. Yeah. Thank you so much, Jonas, for being on the podcast. Before I let you go, where can people find you and ask you questions?
Unfortunately, still LinkedIn and X as well.
Yeah, I'll just link. I sometimes I have to do that. It always hurts, but I do that on my descriptions. I link LinkedIn to my guests. Yeah. But I will do it with you also.
No, you can link to that, and maybe one thing as well. This is just if you want to. I actually recorded like a 90-minute YouTube video where I basically go through my whole educational session on Bitcoin, leaving out everything that's specific to AMP, my company, and going a bit more in depth. If you want to link to that, you can as well. I think everybody that's watched it so far responded really well to it. So just an option.
What is it? On your channel, right?
On YouTube. No, but it's not on my channel. It's on a different channel. I can send you the link afterwards.
Okay, send me the link. Then I'll put it somewhere in the show notes. If I forget, right, someone sends me a comment, I will put it somewhere.
Sounds good.
And thank you so much, Jonas, for being on, and also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye bye.